Hey, what is going on, my friends, and welcome back to another video on the channel. As you can tell by the title, we will be going over Healthier Choices Management Corp. Once again, ticker symbol HCMC. Now, you all absolutely love this company. Y'all want to know as much information as you possibly can about them. The hype is real, and you know what my job is. When you ask, you shall receive. I try to come up, with put together as many videos as I possibly can that delivers you every single form of content about this company, from the risk to the catalyst to the news. And I hope you guys do enjoy this style of content where I'm bringing you as much info as possible about your favorite stocks, as that is what makes me really happy, to make sure that you are all up to date and as informed as possible. So with that being said, I did want to take a quick second to say we did have our highest viewed video ever 2 days ago. This video reached 11,000 views, and for a channel with only about 9.3 thousand subscribers, that's quite nice. So I do appreciate each and every one of you who comes around and checks out the channel. If you do want to stay as up to date as possible, and if you do want all of this information early, as well as access to all of my trades, my trade portfolio, and early access to the content in which I will be posting on this channel, definitely come down to the link in my description, as that will bring you over to my Patreon, and that is where I am fully transparent with all this information. And lastly, if you do want to start your own journey, if you want to expand out to maybe a new brokerage, or start your own investment journey from the beginning, you can always use the referral link in my description, as that'll bring you over to Webull. And when you do deposit $100, you can win up to $1,850 in 2 free stocks. Absolutely amazing opportunity. It's all free, and so this is definitely something to look out for. So the news that we will be talking about today is going over the fact that HCMC announces the sale of $5 million of preferred stock convertible into common stock, initially at 150% premium to the company's most recent closing price. Well, if we do go down into the article, it says that HCMC announced today an equity capital raise through the sale and private placement of $5 million of its Series D preferred stock to certain institutional investors. The Series D preferred stock is convertible into HCMC common stock at an initial conversion price of 0.0024, which is a 150% premium to its last market closing price on the 5th of February, which was sitting at 0.0016. Now, the conversion price is subject to a certain downward adjustments, including when the conversion shares are registered for resale or may be sold pursuant to Rule 144, as further described in the company's Form 8K filed as of the date hereof. Now, we do have a quote from Jeff Holdman, the CEO of HCMC, saying that, led by our largest single long-term investor, HCMC has received an equity investment from a group of institutional investors, with the convertible preferred stock being issued with an initial conversion price at 0.0024 or 150% of a premium to the last market close. And this is important, and I agree wholeheartedly. This show of confidence in the company fundamentals, IP assets, and prospects moving forward is inspiring. Mr. Holman concluded, saying that we remain committed to enforcing our intellectual property rights in the form of patents against all infringers. This again applies to the tobacco industry as well as the cannabis industry. So there's a few things to take away from this. The first one being that I think that the fact that they did offer this, and that they do have a conversion price at 150% over the current stock price, is very, very important. That does again show that these institutional investors are confident in this company. They do have a lot of faith in them going forward, that their stock price will continue to climb, and because at the end of the day, these different institutional investors would not be doing this if they weren't getting benefits from it as well. If they thought this company was going to tank, or if they really didn't have faith in them, we wouldn't see them setting a conversion price so high in comparison to what the current stock price is. So that is very important. Now, we are going to go a little bit more in depth about what exactly a preferred stock is, a convertible preferred stock, why a company might issue them, and then how this also may affect the average investor. But before we do that, there is one thing that I did want to point out, is what he said right here. The fact that he added this in. Now, again, whenever they do issue these preferred stocks, this is a form of capital raising. So whenever they do a capital raising, there's a few different types, right? There's the equity capital raising and a debt capital raising. Now, this one is a hybrid. It kind of sits somewhere right in the middle, and again, we will go over that in a second, but at the end of the day, it's a capital raising. And so whenever he adds into the end here that they remain committed to enforcing their intellectual property rights in the form of our patents against all infringers, it does give me the gut feeling that this overall raising was in regard to raising up capital to further the lawsuit that we are seeing right now. Maybe they needed a little bit more extra money, or maybe this is going to be something that's more like an investment that they'll be able to use further down the line, or maybe we're going to see them start to put more patents out, something related to their patents, as this wouldn't have necessarily been added if it wasn't important. So this does give us a little bit of a hint and some foresight in what exactly this could be used for. So whenever it does come to convertible preferred stock, what even is it? Because a lot of people don't understand, what's a direct offering, what's a public offering, what's an offering of convertible preferred stock, what does all this mean? Well, convertible preferred stock is a type of preferred stock that gives holders the option to convert their preferred shares into a fixed number of common shares at a specified date. It is a hybrid type of security that has features of both debt from its fixed guaranteed dividend payment and equity from its ability to convert into common stocks. So that is what I meant whenever I said that it is somewhere right in the middle, because whenever they do go, do these debt capital raises, that the fact that they have a fixed guaranteed dividend payment does somewhat apply to that field, but they can also capitalize on the growth of the stock and it be more of an equity, as it does have the ability to convert into common stock shall it see, the stock price triple, quadruple, whatever. So it says here that all stocks represent a portion of the ownership of a company. They can be divided into different types. Common stock is the most common, as the name suggests, but then that is followed by preferred stock. Preferred stock can also be further divided into different types, and they have all these different types, but what we're focused on right here is convertible preferred. So an example of what a convertible preferred agreement could look like, maybe one outside of HCMC, is, for example, say a company issues convertible preferred shares to an investor that have a par value of $100 each. They pay a 5% dividend annually and have a conversion ratio of 6. The worst investors in this issue can do is get the 5% dividend, which comes out to $5 per year. But however, if the common stock prices are rising, the investors can do even better. They can exchange their convertible shares for common shares and get 6 common shares for every share of convertible preferred they own. Now this is based on the conversion ratio. A conversion ratio of 5 means they get 5 shares of common stock for every of convertible preferred. A conversion ratio of 6 means they get 6 shares, so on and so forth. For the investor to make money on this exchange, the common shares have to be trading at a price greater than the purchase price of a share of the preferred common stock divided by the conversion ratio. In this example, the common stock would have to be trading again higher than 100 divided by 6, which equals 16.67 per share, in order for the conversion to be profitable. Now, that's why I'm saying that this is very important that they have a conversion price at 0.0024, because you got to think about it. Say if the stock price is capable of going up to 0.003, well, they can use their convertible preferred stock. The fact that they have it in at a conversion price of 0.0024, they could then get it for a deal, right? They could get $5 million of its Series D preferred stock for a deal, and that's super important because these investors are only looking for deals. They're not going to go ahead and just waste money. They're not going to throw money into a deal like this one if they're not going to be able to see some upside from it, in their opinion. And so I do believe that that is a big sign of confidence in this company from this single long-term investor, and I'm very excited about what this could mean for them into the future. So whenever it comes to this overall agreement, how does this affect the common shareholders? The people like you and I, the ones who just own the common stock. Well, how is this a little bit different, and what do they get? I mean, if it's a preferred stock, there have to be some type of preferences. What makes this better, and is this bad for the normal investor? Well, let's go ahead and let's take a look at the overall tiers whenever it comes to what, the ranking of a company's investors. Well, first up is bonds. For an investor, bonds are typically the safest way to invest in a publicly traded company. Legally, interest payments on bonds must be paid before any dividends on preferred or common stock. So they're going to be getting paid out no matter what happens. They're the first ones. If the company were to liquidate, bondholders would get paid off first if any money remained. For this safety, investors are willing to accept a lower interest payment, which means bonds are a low risk, low reward position. Now, next up is preferred stock. So preferred stock is going to be in between bonds and common stock. Well, preferred stock is next in line. In exchange for a higher payout, shareholders are willing to take a spot further back in the line behind bonds but ahead of common stock. Their preferred status over common stock is the origin of the name preferred stock, of course. Now, once bondholders receive their payouts, preferred holders may receive theirs. As noted above, sometimes a company can skip its dividend payouts, increasing risk. So preferred stocks can get a bit more of a payout for a bit more risk, but their potential reward is usually capped at the dividend payout, unless it's a convertible preferred stock. Again, because we do have to remember, at worst, all they'll pretty much get is going to either be no dividend at all, right? Which, I mean, that's not usually all that common, or they're going to be getting whatever the dividend amount is. But if they do see a lot of upside in the stock price, they can then convert their preferred stock over into common stock, which allows them to take advantage of the increase in stock price, which gives them very high potential, and it could lead to even a pretty good deal whenever it comes to them actually buying the shares. So in a sense that this isn't the best thing in the world, I guess, for investors like you and I, as this, basically puts people in in line ahead of us in a sense, that if the company was to liquidate or go bankrupt, that they would get paid out first. But realistically, I don't see that happening with HCMC personally. I don't think that that is a likelihood. I mean, it's always possible, but I don't think it's likely. And so with that being said, this isn't necessarily going to affect us or hurt us in any way. If anything, that does say that there's a lot of good things going for HCMC. And I would say that overall, yes, the fact that people are getting these preferred stocks and it somewhat quote unquote jumps the line, that is not necessarily the best thing. But the fact that this institutional investor does believe that going long term, this company has a lot of potential, and we do see the fact that these institutional investors have faith in their fundamentals, I think that outweighs the negatives of the preferred stocks being issued. So I do believe that that's a great thing, and I think that as an investor that we will see a lot of potential and a lot of good things coming from this overall agreement. Let me know what your guys' thoughts are on this down below, as this is, something that I've seen multiple opinions on. Again, at the end of the day, this is just my opinion. It's not, fact. It's not anything like that. I'm not a financial advisor, but I'm simply just a guy on here giving my opinion about different stocks, different companies, and what all happens. With that being said, I hope you guys did enjoy today's update on HCMC, as I did think that this was pretty important, and I think that it did offer a lot of potential. I think that's a good thing for the company, and hearing some of these good things about them and hearing the fact that these institutional investors do have faith in them definitely strengthens my position, and it makes me feel even more confident in my investment. With that being said, I do post on this channel 2 to 3 times every single day, and I cannot wait to see you all next time. Peace.